We came out of another Super Bowl Sunday, and you know what? Forget the coin toss. If you're trading based on who wins the Super Bowl each year, you're basically flipping a coin, folks. That's what I have to say about the Super Bowl and the Super Bowl pattern. Welcome to Patterns and Profits. I'm Tom Gentile. We've all heard about the Super Bowl indicator. And if you haven't, the theory is that if the NFC wins, the market ends the year higher. If the AFC wins, then we're in for a bearish year. So my question is this: what's the real math say about this so-called pattern? Long-term, intermediate term, etc. And what I want to do is I want to show you a Super Bowl pattern that I found that has a 100% success over the last decade. Yeah, I didn't stutter. All right, I want to talk about that and also the patterns and strategies that you could be trading around this particular strategy or system itself. So let's talk about the Super Bowl indicator first. So here's the rules as you would look at them. Once again, this is a theory. It's not a pattern. It was a pretty good theory. Started in 1978 by Leonard Coppett, who suggested that whoever won the game would help give us an outcome of the market's performance for that year. NFC win, market ends higher. AFC win, market ends lower. Now, how often has this worked? All right, because here we are right now. We all know the outcome of the Super Bowl. The Seahawks really just obliterated the New England Patriots. In fact, if you're following prediction theories, right, because a lot of brokerage services now have the ability to make a prediction on the game and bet on it, basically. By the beginning of the second half, we were already well into the 90 percentile that Seattle was going to win the trophy. Now, that's AFC. So does that mean the year ends lower? Let's talk about how often this works, because I think for those of you that are concerned if the year is going to end lower, once you hear what I got to say, I don't think you're going to be worried about that so much. So here's the historical accuracy. Over the before 1990, the pre-1990s, 90% of the time, this pattern worked. Now, that's what I call a great pattern, but all time, it's been 71% accurate. So what has happened since the 1990s? Well, in the last 20 years, this pattern's been accurate only about 40% of the time. And if you know me as a pattern trader, especially when I look at calendars, patterns on the calendar year, whether they're short-term or long-term, I pay a lot of attention and I pay a lot of focus to what's happening now. So, going back to 1978, we're talking about somewhere, think about this. Super Bowl's 60 years old. I know this because I'm 60 years old. But in 1978, we're talking about 13 years of data that had gone through since then. So the pattern was clearly at least 10 years of data going forward. I think if you go outside of 20 years of data, you're doing yourself a disservice, because things change. You need a closer subset of that data. So that's why the last 20 years, to me, are the most important, and why the accuracy has fallen off quite a bit from this particular strategy. Hey everyone, Tom here. Just like to take a moment to thank everyone for watching this video today. Each of these videos are a result of hours of research, and my team and I love to see the likes and all the comments from you. Everything we do here will always lean towards objective, rules-based pattern trading and lean away from hype, memes, and of course, emotional trading. Now, also to let you know, I've compiled all my articles, all my videos, and all my research into one place that you can access at any time. I also have special reports there as well. Just click on the QR code at the top corner of this video to become a member of Patterns and Profits. It's absolutely free. Once again, thanks for watching. Now, let's talk about a strategy that I found that I think is something you want to pay closer attention to. So this is the calendar that heads into February 13th, all right? 9th to the 13th, Monday through Friday. What do you see here that looks common? Well, what we see here as a common denominator is we see much more bullish opportunities than we do bearish. However, we start to see less and less bullishness coming as we get closer to the 13th. And you're actually going to start to see, when we get into the back half of February, a little bit of a mix, more of a mix of bulls and bears. So this is a pattern. The calendar here that you see is looking at equities, not just ETFs, right? The best equities continue, because as I look inside these days, the best equities that I'm seeing are not the typical stocks that we see and trade and love. These are safety stocks, right? And so let me open this up and show it to you. So of my patterns, I grabbed 3 of them, and all 3 of them seem to be in the areas of safety. I'm highlighting one of them here for the program, and that is WEC. WEC is a company that provides natural gas and electricity services to the U.S., okay? Now, whether you want to call that renewable or non-renewable, that's up to you, all right? But if you're providing natural gas and electricity, depending on how you get that electricity, could be renewable. What I'm telling you is this: forget for a moment the company's name, what the company does, who the officers are, who the CEO is, what his political stance might be. Forget all that. Just look at the data. Because in the last 10 years, what I see when I look at this is that I see a 22-day trade. I see a trade that, 22 different trades starting right around now. I see a 49-day trade. I see better than 5%, 5.25% move during these 49 days. Here's what else I see. I see 100% accuracy on this trade. Just looking at the overall data, I see the end date somewhere around mid-April, and it tells me that the pattern slightly gets better between 10 years ago and today. How do I see all this just looking at this spreadsheet? Well, I'm able to read the spreadsheet, but let's look at this again in chart format. So if we take a look at chart format, WEC on the chart tells me that we have a pattern that started out in 2025 below $95 a share. It shows me that this pattern has higher highs and lower highs. We see that happening. We see the high in the last year was trading around 118, just prior to 118. We get a dip in the pattern from the high, dipped all the way back down to the low 100s, and we're making another run for multi-year highs, coming off of the price this morning, which was $111.42. What I'm looking at is I take what I like to call the TAP. The TAP is the target, all right, price and time projection, okay? Target and price projection, time and price projection. So on a time and price projection tells me 2 things. Target price, 118. Where do I get that? I get that from basically taking today's stock price and adding that 5.25% to today's price. That is the average we've seen in the last 10 years with WEC. I also take a look at the time it takes to get there. Because this is a 49-day average trade, it puts us out to around April 20th. And one more thing that I look at with this particular pattern is as an option trader. Are the options cheap or are the options expensive? You see the red line that's on here too, right? It has a little spike here and there, but look where it's trading at currently. It's trading closer to the lows. So if I were to run out and look at options on a stock like WEC, what am I likely to find, right? I'm likely to find these stock options that are going to be relatively cheaper, right? Relatively cheaper in price than if I were looking at this even just a couple of months ago. So, in summary, what I want to do as a trader is I want to focus on real patterns. I want to focus on real profits. Okay. My money calendar every day gives me access to patterns and profits that are historically 98% or 90% or better. In this case, we have a 100% pattern that I just shared with all of you at the beginning of the live stream. This is an extension of what we talked about last week. Remember last week we were looking at utility sector. Well, WEC is a utility stock. It's an energy and natural gas stock. And so I see a lot of these patterns with utilities happening into early spring. And finally, the big takeaway is don't trade on a coin toss, folks. Trade on real patterns with real profit potential. And I got something for you. You see that little QR code up there? If you were to click on that QR code and you want to see more patterns that we pull together from the money calendar, then I got something for you. All right, less than $1 a week. I have up to 5 90% or better stock patterns each week. We have a 7-part rules-based trading course. All right, access to a members-only website, a library of special reports. We do monthly strategy sessions. I have a free subscription to Patterns and Profits. And for today, all right, today only, it is $49 for a yearly subscription to Stock Cycles Trader. Oh, and by the way, this comes with a money-back guarantee. But you need to, if you click on the QR code, there is a coupon code in there. I believe it's SCT49. Yes, SCT. That stands for Stock Cycles Trader, SCT49. Hit that QR code and put that scan in. And then what you're going to see is you're going to see exactly what I'm talking about here. I'm talking about the ability to get this for a super low price. All right. That's my annual subscription to Stock Cycle Traders for my Patterns and Profits members right here only. And take advantage of it, folks, along with the 30-day money-back guarantee.